the market was kind of propped up waiting for kind of this, Bitcoin strategic reserve headline coming from Trump. We saw a short pop on that. Bitcoin traded above like 106, 107K or something, and then immediately got whacked back down. So, usually when you see the market reacting poorly to good news, that's a signal. In the same way, the market reacting positively to bad news is a signal. There's been a lot of signals of concern and froth, but if we go down to much lower prices from here, the signs would definitely be there in retrospect. So
what's going on, guys? Today we've got a great episode with Will Clemente, the co-founder of Reflexivity Research. In this conversation, we talk about what's going on with Bitcoin, why he isn't such a big believer in on-chain data for trading anymore, and what's going on with the ETFs and MicroStrategy. Then we get into things like AI coins and meme coins. What is their place in the market? Are they sustainable and resilient, or are these simply passing fads that people are just gambling on? And then we also get into some of the best ideas that Will has right now and some of the mistakes he thinks he's made over the last couple of years in crypto. This conversation is incredibly interesting, and it's got lots of unique insights. So listen to the whole thing and let us know what you think. Here's my latest conversation with Will Clemente. All right, well, I thought a great place to start the conversation is you are the wizard of on-chain data. Huge part of your contribution, I think, to the Bitcoin space was all this on-chain data. But things like the ETF, things like MicroStrategy, there's a lot of Bitcoin that's being bought, not necessarily showing up on-chain. How do you think that on-chain data has evolved over the last couple of years? And how do you look at these kind of net new buyers of MicroStrategy and the ETFs playing into their effect on Bitcoin's price?
yeah, what's going on, Anthony? Nice to be back on the pod, like the old days. Yeah, I definitely think people initially knew me for some of this on-chain data stuff where, would kind of look at the blockchain and analyze, different flows based on different variables. I think at this point, the flows, kind of to your point, are so obstructed. It's hard to really find any signal in that stuff. I don't want to say I like disavowed on chain, but like I've very much stepped back from using it, during the last bear market, especially towards the back end of 2022 into the beginning of 2023. The ETFs just amplified a lot of the reasoning behind why. I think some of the stuff is still useful just to understand, is the Bitcoin blockchain still working, right? So we can look at like hash rate or active addresses, things like this, just to block height, just to give you sanity that Bitcoin is still working. I think there's a couple of things around like the cost basis of the network, which is kind of useful, but tracking like quote unquote whale flows or just looking at a lot of the stuff, profitability metrics. Obviously the market's bigger than just the ETFs. But even things like CME, there's just as much open interest on CME as Binance, and just in general, I'd say a lot of the tooling for data and following flows that used to be super transparent. You could even as recently as 2.5 years ago, I mean, you could literally just see all of the derivatives positioning completely transparently in real time, as well as on chain, like all the spot flows. Now all that stuff is very much obscured away with the entrance of TradFi, and as that gets more integrated into some of these kind of traditional venues that we're seeing. So I don't even have an on-chain data subscription. I haven't for I think like over a year now. I just don't find that stuff extremely useful, to be completely candid, anymore.
What is your kind of takeaway? Or a year after the ETFs got approved, obviously they had a major impact in the market, but a year later, how do you look at what they were able to accomplish, and then also what their role will be moving forward?
Yeah, I think the ETFs unlocked a new wave of market participants that can trade and invest in Bitcoin for the first time. I don't know if we've seen sizable allocation yet from some of these very large buyers that are going to be needed to move Bitcoin to 150, 200K plus, like sovereign wealth funds and large pension funds, etc. But I think for some of the boomers that maybe liked Bitcoin, but didn't feel comfortable holding it on some crypto native exchange after FTX, or they didn't want to hold their own private keys, or they can't for fiduciary reasons. the ETFs, kind of unlock the ability for them to allocate. I also think the ETFs from like a qualitative point of view kind of de-risk Bitcoin from like a career risk perspective. So, when Larry Fink's going on TV and shilling Bitcoin, you're probably not going to get fired if, you hold Bitcoin as, a 3 to 5% allocation and it goes down 25%, like maybe you would have in the past. So I think those are kind of two underlying factors that have been a net positive for Bitcoin coming from the ETF. Recently, um, I believe or it was Grayscale or BlackRock filed, maybe both of them filed for the in-kind redemptions on the ETF, which is good. So it basically allows people to redeem the underlying Bitcoin, whereas before it was cash. So, if you wanted to redeem Bitcoin and then move it, wherever you wanted to for whatever reason, you'd basically have to redeem in cash and then like rebuy. And then obviously you have, some taxable events there. So, now once we'll have which I think that was like really stupid that they had it that way from the beginning. It was just kind of a Gary Gensler thing. But I think now that you have the in-kind redemptions, that's also going to be a net positive as well.
Let's talk about MicroStrategy, which I think is the second big development over the last 4 or 5 years. They obviously have been buying very aggressively in the market. They now hold over 470,000 Bitcoin. But we've also seen a number of kind of copycat strategies. You've got Metaplanet, Semler Scientific, a number of other businesses. How do you look at this kind of net new buyer of corporate publicly traded companies being introduced to the market?
Yeah, for sure. I think the expert on this for anybody listening is go check out all the stuff that our friend Dylan has put out. He's the head of Bitcoin strategy at Metaplanet. So obviously he's been super deep in the weeds. I don't understand the stuff remotely or I've kind of looked into it remotely as much detail as he has. But at a very high level, MicroStrategy is basically putting on a speculative attack on the dollar. Excuse me. So basically they're able to kind of leverage the ability to tap into, the debt market. And, they're basically able to, take out, relatively healthy leverage to purchase BTC, and kind of harness the volatility within MicroStrategy stock and some of the options pricing stuff that gets baked into that. And ultimately kind of generate this Bitcoin native yield, which Saylor has done a great job of memeing for MicroStrategy, which basically just means that although you're getting diluted in, outright value, or, in traditional sense in terms of looking at just, the number of shares outstanding, the Bitcoin per share is going up over time. And, I would say the majority of people that are holding MicroStrategy, on a directional stock picking basis are bullish on Bitcoin. Of course, now integrated into the Nasdaq, so should benefit from passive flows. But that's kind of the super high level of why MicroStrategy has been interesting. You saw it blew out tremendously relative to the NAV. You had some of the MicroStrategy people basically saying, this is justified because you shouldn't just look at MicroStrategy relative to the NAV. It's this kind of underlying, financial engineering, and that's the business. Is it's a, it generates, more Bitcoin per share, and it's a Bitcoin treasury company. The reality is always somewhere in the middle. But we have seen MicroStrategy obviously, correct a bit over the last month and a half after that crazy rally that it had. I think the way that we at Reflexivity Research, Anthony and I's previously owned company that got acquired last year. At the end of 2022, for the listeners, we put out a report on basically the breakdown of MicroStrategy in collaboration with Blockworks, and basically said that Saylor was unlikely to get liquidated. The only stuff he could technically get liquidated on was the Silvergate loan, just because of the way that the debt was structured. And Saylor actually made out like a bandit on that because all the Silvergate stuff happened, and I believe they ended up getting back more BTC than they would have otherwise. So I don't think that you have any immediate concerns in terms of MicroStrategy, even if Bitcoin went down 50% from here. So it's a very interesting, I think, play in the public market. And especially now that it's included into the Nasdaq and getting passive flows, that's interesting for MicroStrategy as well as for Bitcoin, because then in theory, you start to have these kind of, at least on a very, very small scale, passive flows that come into Bitcoin over a multi-year period that can be interesting.
One of the things that I see people talking about, obviously the public market, we've seen a lot of corrections there. Whenever Bitcoin goes down, those public market companies go down. But what we have also seen in kind of more crypto land is a ton of people pointing to the market caps of these coins. So they'll say, hey, it's a $2 billion market cap, but then the fully diluted value may be like $8 billion. And there's this really, really big overhang of kind of unissued tokens, or tokens that are going through a vesting process but haven't yet hit the market. It seems like throughout 2025 and into 2026, a lot of those tokens will become unencumbered, and people will be able to hold them or sell them, do whatever they want. How do you look at those dynamics of the market? And are there certain frameworks you use to evaluate kind of different projects or coins?
Yeah, this is like a really important thing for people to understand that are looking to trade this stuff. First of all, I'm a very much like, there's Bitcoin and then crypto guy, and the crypto stuff is for speculating. Listen, there's too many tokens. Like, we've got millions of tokens now. In 2021, there weren't nearly as many tokens. In 2017, there were like a few thousand. So, we've talked about this in podcasts that we did at like the beginning of 2023. Like, there, even back then, but this is even more so the case now, especially with Pomp and all the Memecoin stuff and the barrier to launching a token now. There were just way too many tokens coming online. Even again in 23, I mean, you were looking at hundreds of millions of dollars of tokens that had to unlock, and you got to ask yourself, where's this money going to come from? Even if half or even if 25% of that supply is sold shortly after the unlocks, there's just not enough money coming into this space to absorb all that. And so, now at this point, it's billions of dollars of unlocks. And then meanwhile, you've got meme coins that have such a low barrier to launching. You can spin one up in 30 to 45 seconds, so you just go on Pump Fun, and, you can just toss in an image and you toss in the symbol for the token that you want to do, and you're off to the races. So, what we've seen is just this hyper rotational kind of PvP market experience over the last 2 years, where seen these really, really aggressive rotations from sector to sector, and these very short kind of flash in the pan moments, specifically for the memes, but also from a sectoral perspective or thematic perspective within some of these on-chain games that are being played. So in general, I feel like, what does all that mean, right? What does all that rambling mean? It means that there's going to be more dispersion in the market, because you just can't have all these things go up. Like in 2017, for sure, even though I wasn't around back then, you can just look at the price history of tokens back then. And in 2021, I mean, everything went up. You had stuff going to $10-20 billion with no usage at all. And that was just because people wanted to buy crypto, and people just came in and just bought whatever, and that just is not going to get rewarded by the market anymore. The market participants are too sophisticated now. And again, there's just too much token supply. So I think, kind of, you can't just spray and pray with these altcoins anymore. You've got to pick, a sector, or, something, that actually makes money, or, something that's got a path to getting some significant adoption, or, has a strong narrative, and these types of things. So, you've got all these tokens that are competing for this very scarce pool of capital and attention. And so that just, again, leads to more dispersion. And so, I think you got to think very deeply if you're going to play, kind of the altcoin games of, what's going to be the next hot narrative in the next month, and trying to think about, second, third order effects of things, or, what's profitable. one, I don't want to start, shilling individual tickers, and I don't have a position in this, but one thing that has held up, I would say, pretty well over the last couple weeks, especially as a lot of these on-chain coins got whacked, was Hyperliquid, because they're basically an on-chain DEX that's also been kind of positioning themselves as an L1 as well, but they're very profitable. It's very simple. You kind of are owning the casino, and so things that are actually making money. It seems like you're seeing kind of uh, a rotation capital, back to kind of those things. I think it's the memes and the on-chain stuff is in a very tough spot, because I think the Trump coin pulled forward a lot of the demand for these things. Trump went from nothing to 70 to 80 billion dollar market cap in 14 to 16 hours, which is the craziest thing I've ever seen in crypto, hands down. And for anybody that was paying attention the night that the token launched, I mean, it was just immediately everything nuked 25 to 30% on chain, and then continued to bleed out and has still been bleeding out. And the reason is, again, there's only so much liquidity on chain and there's only so much attention. And so Trump just kind of came in and just basically just like mobbed the whole market. Like, he just kind of dropped his nuts on the table, and everybody was like, I have to buy Trump coin. This is like the greatest KOL that you could possibly have for a coin in the history of mankind. There's no bigger name than Trump. So you just saw people sell everything that they could that night and put it into Trump. And it kind of pulled the veil back, I think, on how liquid a lot of this stuff is, especially across the board. And I think it also pulled forward a lot of demand. I mean, you could have put millions of dollars into this thing. I mean, you could have put $10-20 million into Trump coin below 10 billion, and hit a 5 to 7x, almost overnight. So I think that it pulled forward a lot of the demand for memes, and kind of showed that maybe normies aren't going to come in and buy all of these crypto native memes, and they're just going to buy things that resonate with them. And Trump obviously is the hottest name that there possibly could be, and you saw it just completely suck the liquidity out of everything. And then shortly after, obviously Bitcoin's kind of rolled over, and then you have the DeepSeek stuff, which maybe we can touch on. And obviously the Nasdaq's had a pretty brutal day. We're recording this on Monday, the 27th. Down almost 3.5%. So you kind of had this like 1-2 punch for a lot of these on-chain coins, where Trump kind of sucked the liquidity out of everything, made everything very weak. The books were super thin, and then Bitcoin rolled over, was super weak. You saw like poor reaction to a lot of the news headlines recently, and I kind of called that stuff out on Twitter of like, this is a little concerning. Like, you had, I'm not saying that I called the top, but I'm just saying there's been some concerns, recently for sure. Like, you have the Doge ETF, filing from Bitwise. It went up, a couple percent, instantly got whacked back down. You had the Solana and XRP futures filings. They popped a little bit, immediately came back down. The market was kind of propped up, waiting for kind of this, Bitcoin strategic reserve headline coming from Trump. Then we kind of got left with this like committee that's planning to put together a stockpile of different assets, and it's not very clear. And so, we saw a short pop on that. Bitcoin traded above like 106, 107K or something, and then immediately got whacked back down. So, usually when you see the market reacting poorly to good news, that's a signal. In the same way, the market reacting positively to bad news is a signal. So again, I'm not saying that I like shorted the top and sold everything like within a day of the top, but there's definitely, I've been vocal about this on Twitter. There's been a lot of signals of concern and froth. I have no idea. I mean, this is probably the worst read I felt like I've had on the market and my 4 or 5 years in the space at the moment. But, if we go down to much lower prices from here, like 80, 85K, which again would be like a normal Bitcoin bull market correction, like the signs would definitely be there in retrospect. So, I don't think now is like the time to pile on risk, especially into some of these like far tail assets at the moment.
How do you look at the meme coins in terms of their place in the market? Obviously there's brands, but is this kind of, hey, these things are all going to be interesting, people are going to speculate and gamble on them, and then after this cycle we'll be done with them? Or is there something more happening here other than kind of gambling? Today's episode is brought to you by Ledger. They're celebrating 10 years as the most trusted name in crypto security. With over 7 million users and 20% of the world's digital assets secured, Ledger continues to lead the way in protecting your crypto and digital ownership. Their latest devices, Ledger Stax and Ledger Flex, feature the world's first secure touchscreens, making managing your assets easier and safer than ever. Plus, the new Ledger Security Key app offers a secure alternative to traditional passwords, enhancing your digital security. Go to ledgerpomp.com to take control of your digital future. That's ledgerpomp.com. LEDGER pomp.com.
We recorded a podcast last year. This might have been the last podcast that we did together. But basically, we broke down the meme stuff and kind of talked through everything. I think the reason why memes did very well, there's a couple reasons to like distill it down into a few short ones. I think, from a super high level, and not to like over intellectualize it, but you've got this massive wealth inequality in the US. A lot of that is driven by kind of the moral hazard that was introduced after 2008. Rich people that own assets, and that's especially become the case after, asset performance has got super concentrated within indices. Rich people that own a select pool of assets have outperformed everybody that doesn't own assets. And at the same time, those assets are becoming obviously less attainable as they're going up in price for the people that don't own assets. So you've got increasing wealth inequality, and there's other reasons, around monetary debasement why that's also the case. And then, meanwhile, you've got, the trend of, everybody uses the internet now. That's not like obviously a non-consensus thing to say. Everybody on the planet uses the internet in like a developed country. And meanwhile, you've got kind of this trend as a extension of that. I think people across the world are just addicted to dopamine. I'll throw myself in there too. I'm a victim to it. Between social media, the ease of access to everything you could think of on the internet. And part of that is obviously gambling. Sports gambling is incredibly popular. I'm 22. I mean, almost everybody that I know that's not in crypto my age does some amount of betting on sports. Obviously a lot of these major, sports organizations have been working to actively integrate sports betting into kind of the broadcasting experience and watching games. So, I mean, it's just, you're hyper gamifying all these things and encouraging people to speculate on them. So, when people discover crypto, specifically meme coins, I think that satisfies the demand for people to want to speculate. They want to gamble. They want the dopamine hit. And I think if you go back to last year, Murad, eventually put together this really, really, well put together thesis on meme coins at Token 2049. Which there's like 10,000 likes. I think most people in crypto have seen it. There's all these tech altcoins, which, to go back to the original point that we were talking about after the first question, like in 21, all these people got hurt investing in altcoins because there were these hidden unlocks. But then that information became widely known. And, now that's not really edge anymore. Of like GCR very famously shorted the end of 2021 because he knew all these altcoins were going to unlock and there's going to be a ton of supply. Nobody was there to buy it, but like that wasn't like super widely known information. Over the last 2 years, everybody, I mean, there's like literal data providers that specifically are showing all the token unlocks. So I think, the meme coins were kind of a pushback against that, as well as there was kind of just this general idea that like there's no value accrual to any of these tokens, which largely is true, for being completely candid, right? A lot of these things are just straight up speculative vehicles with maybe the promise of generating some amount of, profit in the future, or some amount of, real cash flow in the future. And so meme coins kind of filled the gap of there being a lack of any type of technology that people could actually get excited about. Like the space was, and still is, but was extremely jaded last year. And there's basically this idea that, okay, well, like none of this is worth anything. None of this is generating any value. There's Bitcoin and all this other stuff, which is straight speculation. Why not take that all the way to the extreme and just buy memes? Which I think was a very rational thought process. But I would say now it's a little different because obviously now you have this pro crypto administration that's come in with Trump and David Sachs now heading, the AI and crypto stuff. Obviously Gary Gensler's out. We already saw a change around the SAB rule, which allows banks to custody Bitcoin and unlocks a ton of products for people to use Bitcoin. And I also think, there's a 80 to 90% chance in my eyes that we're going to see some type of we'll see how, bullish it is for the space, but we're going to see some type of new regulatory framework for this stuff come in the next, couple years, if not the next year or so. And so now I think that kind of changes the argument a little bit, because, some of these tokens, especially DeFi, which had gotten beat down so badly at the end of 2022, things like Aave and Lido. Aave's been one of the best performers over the last month and a half, not only because Trump partnered with Aave and his DeFi protocol that he's launching, but now you've got somewhat of a clear path to saying these things might be able to return revenue to the token holders. Stuff like Aave or Uniswap are making money. Aave is the leading borrowing lending protocol on ETH, held up through all the credit contagion of 22. Uniswap is, very widely used for token swaps. They make money, but they haven't been able to return it to the token holder. So all this to say, I think because of the pro crypto administration that's coming in, the argument that none of these things accrue any value, that's no longer true. And so the kind of void that meme coins were filling, it's now a little more nuanced than that. So I think some of the leading meme coins that have somewhat of like a Lindy effect, I think could continue to do okay. Especially because if you're coming in looking to buy memes with $5 or $10 million, there's a very select number of assets that you would feel comfortable coming in and buying. These are things that probably have a long history of, longer price history, at least, 6 or 12 months of price history, have some amount of Lindy, maybe have gone through at least 1 or 2 significant drawdowns to kind of test the holder base, that type of thing. I think it's going to be very difficult for like brand new meme coins to come in and have any staying power. A lot of them will probably do these like short run-ups and kind of Burj Khalifa back down, as we like to call it. Look at like Moodang or Chill Guy or any of these recent memes that kind of were a flash in the pan of like some, social online trend that got really hot. These things run for a week or two and then, the narrative's dead and that's it. So that's kind of my thoughts on memes, is like the big established ones, for a couple of reasons that we just laid out. Those can probably do okay. Like, I'm not saying that I don't think memes will do well. But I don't think we're going to have as wide of a cast of just general meme coin frenzy like we did at the end of 23 or throughout the beginning, first half of last year. And I think now, because of the regulatory framework shift, some of these DeFi assets that were some of the least attractive assets last year are now, some of the most attractive assets to think about. I guess I'll pause there, but I'll say like the only thing that's tough is they have, as silly as this sounds, they have kind of bounds of valuation that they are tied to. So, part of why a meme coin can run so hard or an L1 can run so hard is there's no valuation that these things are tied to, right? I mean, you can't really say, you can look at like fees and things like that, but it's very straightforward with the DeFi protocol. You say, okay, well, like how much revenue is it generating? How much money are they making from that revenue? What's the rate in which that's growing? And then you can put some type of, traditional like cash flow model on that and value it. And so, maybe it can trade at a pretty absurd, multiple because it's crypto, like 50 or 70x, like some of these things are trading at, but like, it's, they're not going to trade at 300 times, right? So I think to some extent, these things are capped a little bit from like a speculative like premium perspective, whereas something like a meme coin or Bitcoin are not capped by anything like that because they don't have cash flows.
How do you think about these AI coins? It seems like some of them are meme coins in disguise, and then it seems like some of them are tied to whether it's open source projects or kind of more concrete things. So how are you evaluating that space?
Yeah, I've been pretty publicly like interested in these AI coins over the last 2 or 3 months. They've gotten whacked with the rest of the market over the last week and a half for sure. I mean, partially because of the Trump liquidity stuff, and then Bitcoin kind of that 1-2 punch that I talked about for a lot of these on-chain coins. And then now on top of that, the Nasdaq rolling over. So like these things are obviously not immune like anything else. I think they've been holding up better than some of the memes, but my kind of thought process with the AI coins is I think they're going to be the market's kind of desired sector for risk taking. And again, when Bitcoin goes down, I mean, these things are going to get destroyed. But um, I think they're interesting because there's like kind of the bell curve meme, but I'd say like to simplify the whole thing, it's like the left side of the bell curve is you've had this enormous amount of gains being made in the private market in OpenAI, Perplexity, etc. And then in the public market, it's just been Nvidia and retail and individual investors. I am retail. Have missed out on all that price appreciation, but they're excited about AI. So, kind of my thought process is, speculating on some of these, AI assets, whether it's the current, ones that exist today, or we get like a new wave of them, eventually. I think that's from the perspective of the, speculating on alts, I think that's the most interesting sector to me, followed by things that generate revenue like the DeFi protocols that now benefit from the change in the regulatory landscape. We could mention some tickers, but in general, I think some of the large frameworks that have actual contributors and usage are kind of interesting. We had this big run up at the end of December. I gave back a good amount of gains candidly on some of these things, and I'm now nearing break even on some of the assets that I've been holding through the last 2 months. But I think the DeepSeek stuff is interesting to me because you've had obviously OpenAI be closed source, DeepSeek is open source. I think that can spin up this narrative of, well, is open source kind of the way for AI development moving forward? If that's the case, then what are the second order implications of that? I think basically the base compute layer gets commodified if that's true, and then the value accrual goes to the agents specifically, or applications. If you don't want to use the agent buzzword, just applications built on top of these things. That's where the value accrual will head towards. And so, for some of these open source crypto projects, or any other open source, AI application or agent stuff, crypto aside, they can just plug right into DeepSeek pretty seamlessly. So for example, again, I don't want to like shill tickers, but the largest framework in crypto is ELIZA. And they've just seamlessly integrated DeepSeek 2 weeks ago. So basically the whatever's being built on top of these things benefits, because regardless if it's DeepSeek or OpenAI, it doesn't really make a difference for the things being built on top. So yeah, I think they're interesting. I think they're kind of the far tail asset that I'm most interested in. If Bitcoin is in a strong uptrend, at the moment it's not, and so these things aren't going to be immune on the way down. They're gonna get hurt like every other risk asset. But I think they're interesting to pay attention to if you like to speculate on some of the more far tail stuff in crypto.
What else are you excited right now about? You had a position in Coinbase for a while. You had the public miners, the AI coins. You've done a very good job of navigating, I think, the last 18 months or so in the market. So what are you excited about now?
Today's episode is brought to you by Meanwhile. Meanwhile is the world's first licensed and regulated life insurance company built for the Bitcoin economy. Operating on the Bitcoin standard, they do everything in Bitcoin. You pay in Bitcoin. They pay claims to your family in Bitcoin. You take out policy loans entirely in Bitcoin when you need liquidity. Meanwhile, Bitcoin life insurance has redefined what it means to hodl. Protect your family from life's uncertainty in a broken financial system. Build intergenerational Bitcoin wealth while the cost of living skyrockets in dollar terms. Get all the tax and legal benefits of life insurance now in Bitcoin. They are actively binding policies today. Whether you are a long-term Bitcoiner or are just considering it for the first time, a Bitcoin whole life policy could make sense for your wealth plan. Visit their website, meanwhile.bm, to join the waitlist and to learn more about the world's first Bitcoin life insurer. Again, that's meanwhile.bm. Go check them out today.
Yeah, I think it's really just those two things at the moment. The AI stuff for sure. And then, like I said, the stuff that's generating revenue or things that are benefiting from, a shift in kind of the regulatory environment and may get uplisted. You know, disclosure, obviously, Anthony and I's company got acquired by, a company that's based out of Canada and traded on Canada. So I'm kind of, talking positively about something we have a position in. But things like Galaxy, for example, or other companies that are traded in Canada that, didn't get uplisted basically because of this harsh regulatory regime in the US, that seems like a pretty good bet. I think a lot of that's probably got priced in now, and that probably got almost immediately priced in after Trump got elected. But, those things can probably keep doing well if the US, continues to trend in this direction. The other thing that I'm bullish on, but like it's tough to speculate on or invest in is stable coins. I think it's pretty clear, especially after, the US has come out with some stuff over the last few days, that stablecoins will probably keep doing well, and we'll probably see further adoption of stablecoins. Stablecoins benefit the United States because they're buying treasuries, T-bills widely and treasuries, and basically backing the stablecoin with that, and then they're able to pocket the difference between the dollar backing and whatever yield they're generating from the T-bill. And that's in the United States' interest as well because it's subsidizing demand basically for our debt. So yeah, I don't know what this updated metric is, but Nick Carter did a presentation like a year ago and showed that stablecoins were like the 15th or 16th largest sovereign holder of treasuries if you basket Tether USDC together. I suspect that stablecoin usage will probably grow. Maybe if Circle IPOs, that could be interesting. Got to obviously see the valuation in which they launch at. I think there's probably a pretty good chance that that Circle IPOs, given the regulatory shift in the US. So that's something that I'd keep an eye on. But yeah, I would say that's probably it.
When you think of public companies, I think most people know that I own DeFi Technologies, I own Soul Strategies, I own Hut 8. I have a little bit of Reddit stock from a prior private market investment. But what are some of the things that you're excited about in the public markets?
Yeah, again, I think it's like companies that might get uplisted to the US seem interesting from a crypto perspective. Again, Circle seems interesting to me. I was really bullish on Coinbase for a while. I bought Leaps on Coinbase at $70, and maybe after this we can get into like some of the mistakes that I've made over the last 2 years because I think that could be an interesting kind of string to pull down if we have time. But my bullishness on Coinbase has faded a bit because to me, I mean, there's been a couple issues that Coinbase has had. Generally, a good company, obviously good people that work there. But it seems like they've got some pretty tough competition on the retail side with Robinhood. Robinhood's crypto volumes have been steadily growing. I think Robinhood's probably got the highest likelihood of kind of becoming like the everything finance super app for people looking to trade, crypto stocks, bonds, whatever. They launched this. I don't know if it was I think your IRA you could put in or something, or just some type of retirement account, right? That they were matching. So it seems like they've got pretty tough competition coming out from Robinhood. So I'm not as excited. Still generally think Coinbase will be worth more in the future. Um, yeah, I think obviously interesting stuff outside of crypto. That's not really my realm of expertise. Hopefully we get some more AI companies that IPO and that maybe add to the kind of AI frenzy. But in terms of crypto, it's really just, I think, companies that benefit from regulatory stuff, Circle if they IPO. And then I guess the other small category, which maybe you could make an argument against now with DeepSeek, is these Bitcoin miners that are transitioning into AI. So I no longer have this position on, but I had a position on for a bit. I had calls on Wolf from like 450. Didn't sell the top, but took them off in like I think the upper sevens or something. And kind of the thought process there, which I think it's still true for Wolf, Core Scientific, Hut 8. If we have this continued build out of AI in the United States, we're going to have to start to get creative with the data centers that we're using for the stuff. And so those companies that are looking to shift into allocating the resources to AI compute, I think those companies can also be interesting. I haven't looked deeply at any of them since I took my Wolf position off like a month and a half ago or so.
What do you think the biggest mistakes are that you made over the last couple of years?
Today's episode is brought to you by NASDAQ-listed BitDeer. They trade under the stock ticker BTDR. They're led by a seasoned management team. BitDeer is a global leader in Bitcoin mining and high-performance computing for artificial intelligence, and they are backed by technological innovation and a massive 2.5 gigawatt global power portfolio. Recently, BitDeer launched its own Bitcoin mining ASICs named the Seal Miner to target what Wall Street analysts project to be a multi-billion-dollar annual market. Their proprietary Seal Miner ASICs are redefining efficiency and performance, and they are backed by the industry's most advanced chip roadmap, with 2 more groundbreaking models set to launch in 2025. To learn more about BitDeer's cutting-edge technology and business, visit their website at bitdeer.com. That's BITDEER.com. Go check out BitDeer today.
Yeah, I'm still obviously super young, and I'm trying to figure this stuff out, mostly like in my apartment by myself. I've got a couple smart friends that have more IQ points than me that I try to bounce ideas off of and try to, kind of help shape my thinking. But a lot of the mistakes, for better or for worse, I've kind of learned through doing and losing money myself. I think the biggest two are sizing. We can go one by one. The first is sizing. So when you have a position that you feel strongly of, it's what you should do is bet big early on in the trend and take risk off as the trend progresses. But the natural human tendency is to kind of be nervous about putting risk on at the beginning because it's not so clear, because the market hasn't validated your thesis, and then you start to add as the trend progresses. So that's definitely been one thing that I've tried to improve. Coinbase was a great example. I think candidly, I kind of nailed Coinbase. I've missed on a lot of things, been wrong about a lot of things, but I was pretty right about Coinbase, but I didn't size up nearly enough. And there really wasn't a real strong reason outside of, kind of just doubting like, oh, well, am I so smart? Like, why is it the market pricing this stuff in? And it's kind of thinking for yourself and being willing to bet early on in a big way. The other one I think is probably the most important in crypto, arguably, is like thinking for yourself. I think there's a lot of borrowed conviction in crypto, and a lot of these like influencers that you follow, including myself, I don't really like using that word, but these people aren't like gurus, and they don't have, most of the time, they don't have your best interest in mind. So, you really need to think for yourself. If you're borrowing conviction from even like your friend, who tells you to buy something or whatever, and you have no reason why you're holding the thing, well, the information can change, and that person's opinion can change 30 minutes later. Or the thing just has a typical crypto 60-70% drawdown, before going up over the coming months. And then you get shaken out because you have no conviction on the thing at all. And you don't really know why you're holding it outside of like your buddy told you to ape into it. So I think thinking for yourself is incredibly important. And also, the more that you can trust yourself, it kind of goes back to the first point. Then you're able to really develop the conviction to size things up accordingly, and avoid some of the issues there. I think those are probably the biggest two. We can keep it relatively short.
I think you're doing a great job. Everyone makes mistakes, but I think you got not that much to worry about. And I think most people in the audience are pretty thankful to you for all the knowledge and information over the years.
Thank you, man. Yeah, it's definitely, I will say in general, like, the market's gotten a lot more difficult over the last even, 6 to 12 months. It's just a lot of these crypto native kind of idiosyncratic things that I think you could trade are gone. Not that I was ever really, executing on some of these strategies, but like being able to short alts, like I mentioned earlier, into unlocks, like that information is all there. And then you get all these weird games now where like, the foundation and the investors of the project know that the public knows about this stuff. And so then there's this like weird psyop 3D chess stuff going on where they try to like get the token to pump into the unlock, or they move the schedule so that it squeezes out people shorting it. And also there's all this like obfuscated stuff, like the team selling OTC before the tokens even unlock, where they hedge it out and all these things. So there's the derivatives data, like I said, it's harder to track this stuff. You used to be able to just look at open interest on perpetual futures and funding rates and almost instantly know how the market was positioned going into something. It was like 80-90% hit rate, like Bitcoin's trading down, open interest is going up, funding rates are going up, people are buying the dip on leverage. We're probably due for another leg down. Or the inverse was also true. A lot of this stuff is just it's not so simple anymore because there's a lot more sophisticated market participants. So the odds are, like, if you're an everyday retail investor like me, you're not gonna, if you know these certain dynamics and they exist, the odds are the people that are like, really, really sharp, at some like HFT firm or something, trading low time frames, or, just sophisticated like hedge funds in general, like they've probably known about this stuff long before you. And that a lot of that stuff's probably already priced in. So, yeah, I mean, I would say it's been a really tough market if you're trading this stuff over the last 2 years. Candidly, there's been a ton of dispersion. The rotations have been really aggressive. I think, we're kind of at the point where there's 2 or 3 big assets that have done well. And if you miss those, you're in rough shape. Like I think last year it was like Solana, Coinbase, Hyperliquid, and a select basket of memes, but you couldn't, if you're trading with $10-15 million, you couldn't get size into that stuff. So it's been a tricky market, man. And I think we're probably going to see a lot of people candidly looking to just hold Bitcoin at this point, because I think it's been interesting.
Where can we send people to find you on Twitter?
Sure. My Twitter is W Clemente III. I still am sharing some of my thoughts and such. Obviously, phoned back on doing the podcast, but Anthony asked me if I wanted to jam today, and I couldn't say no. So here we are, and maybe we'll do another one like every couple months or something. But Yeah, man. It's
Follow Will on Twitter.
It's been an interesting year.
Follow Will on Twitter, everyone. If you don't follow him, highly, highly suggest. Will, thank you so much for your time. You always got great insights. I learn something from you every day. Hopefully other people find this just as valuable, and excited to do this again in a couple of weeks.
Thank you, sir.